everyone, welcome. You're watching Business Today Television. I'm Sakshi Batra and this is your favorite show, Daily Calls. Viewers, before we start off by taking all your queries on the show, I want to share with you this good news. Your favorite channel, Business Today Television, has won big at the ENBA Awards by E4M in the 2025 edition. This is the 17th edition of the ENBA Awards, and Business Today Television has been able to secure 6 awards at these prestigious awards of ENBA. Now remember, we have actually celebrated all of these victories with all of your support and consistent belief in your channel, and this is what we take as a platform to thank you for your sustained belief in us and consistent viewership that you have shown and displayed for all of us. So this is as much your victory as much as it is ours as well. Some of the visuals at the ENBA Awards are being presented on your screens and you're able to see that. The big awards that we have been able to secure this time is for our show Easynomics, that's anchored by Siddharth Zarabi, the group editor of Business Today. He's secured a gold award there. We've also had our Market Masters edition, where you see the top voices of the stock markets come in and explain to you as to how should your strategies be in the markets. That's anchored by Shail Bhatnagar. This has received a bronze award. We've also seen Market Guru, that's anchored by me, that's also received a silver ENBA award this time around, and you're able to see both Shail and me receiving the award there with Dr. Anurag Batra as the helm of affairs at ENBA right there. We've also seen that the opening show of our market today, that's anchored by me again, that's also received a gold award at the ENBA Awards. We've also seen Siddharth Zarabi, our group editor of Business Today Television, secure a big recognition at the ENBA Awards. He's received the Best Business and Finance Journalist for English and Hindi, and he secured a gold award at the ENBA Awards. And of course, I have also received with a humbling experience the Best Business Channel Anchor for English at the Gold Award of ENBA this time around. Well, we want to thank you, viewers. This would not have been possible without your consistent support and your constant belief in Business Today Television. Like I have been mentioning even at the award ceremony, I still repeat myself that these rewards are not just recognition, but they are big responsibilities. They ensure that we will be raising the bar high. We will just move forward with a lot of commitment towards all of you viewers. We will ensure that every day when you place your trust in us on Business Today Television, with all the guidance that you seek on your investment journey, we will provide you all the clarity that you need and consistently support you in getting the best analysis of stock markets on Business Today Television. And with all the celebrations, let's get back to the markets now. How are the markets trading as we near the halftime trade? 26,010 is what we are at, 0.1% lower in trade. But we have a lot of sectors that are still holding up. You have the PSU banks that are up and about. Remember, there's this entire report that we've brought out for you on Business Today, from our sources telling us that yes, there could be an increased amount of foreign ownership, and that process is on. FMCG stocks, IT stocks, banks, the small cap stocks, these are all up and about in trade. When we talk about the key stocks that are moving on the Nifty today, you have Interglobe Aviation, that's the parent company of Indigo, that's the top mover on the Nifty today. Asian Paints is higher. You have Shriram Finance, that's also among the top gainers there. HUL, we also have Tata Consumer Products. So FMCG names are also doing well in the trade today. We have some Adani Group stocks that are also holding up. But on the declining side, you have ONGC, you have Eicher Motors, M&M, Bajaj Auto, JSW Steel that are still hovering under pressure. Remember, this has also been a day when we've seen new debut stocks enter the stock markets. Corona Remedies is continuing to soar higher after a premium listing. You can now see the stock up by about 38% odd at 1463. So for all those investors who had applied for corona remedies and had got the allotment, this is a moment to celebrate. You have got strong listing gains. Wakefit Innovations, remember, had a weak listing. It slipped below, but right now it's actually recovered from the day's lowest point, and you can see a 3% uptick on Wakefit as well. Those are the two names as far as the IPO space and the new entrants are concerned that are also up and about. In the Nifty 500 names, you also have a lot of interesting names like Geojit Financial Services. Remember, there's also an investment of Rekha Jhunjhunwala that we have seen coming in, and a big block deal that has led to the stock soaring higher in trade, and you can actually see a strong move on that one. Geojit is up by about 8 odd percent today. In fact, it had moved up about 17 odd percent, 16, 17 odd percent, and you can actually see still holding about 7-8% higher. No, it's actually at the day's high. You can see this move coming in on Geojit Financial Services. Let's also look at Coffee Day Enterprises. That's also up. Iron Exchange, SEPC, Shakti Pumps. These are all the stocks that are hovering higher in trade at this point in time. Let me also pull up for you some of the key stocks in the Nifty next 50 names that you could be watching out for. You have Siemens, that's up by about 2 odd percent. Britannia, IOC. You also have Canara Bank, Ambuja Cements, HAL as among those stocks that are moving up. Within the banking story, like I pointed out, you could actually see the PSU banks that are hovering higher. Canara, Bank of Maharashtra, Punjab National Bank, State Bank of India, Bank of India. These are all the stocks that are still hovering up. And in the NBFC space, led by Geojit, you have Edelweiss, that's up, Spandana Spurti, Home First Finance, Adani, Anand Rathi Wealth. These are all the stocks from the broking side and the wealth management side that are also showing us a lot of strength in today's trade as well. Let's also try and understand what's really happening as far as some of the EMS spaces is concerned. And, when we talk about the space, PG Electroplast is topping the charts, but just about 0.3% higher. Havells, V-Guard, these are the other stocks that are hovering up. Within the metals pack, you have Tata Steel, Hindustan Zinc, Nalco, Jindal Stainless, that's up and about in trade. Within the other stocks, like when we talk about the manufacturing names, well, you will be able to see Dixon Technologies, that's also up again from the EMS space. Remember, last one entire week, 10 days, we've actually seen a lot of drop amidst, along with these lines as far as the EMS stocks are concerned. But today there is some recovery of that sort here. Talking about some of the other stocks, well, you can talk about the auto and the auto ancillary space. There is a lot of buzz there. You can see Wheels India, that's up. Lumax Auto, that's up in trade. Shivam Autotech, that's also buzzing in trade right now. Defense names are also higher. Names like BEML, MTAR Technologies, HAL, Mishra Dhatu Nigam. These are all the stocks that are still hovering higher as far as the stocks are concerned within the defense pack. Now let's also move forward and try to see some of the other names where there is a lot of buzz. FMCG, like I pointed out, the sector is doing well today, along with the heavyweight names like HUL and Tata Consumer Products that are marked out for you already, and even Britannia. There's also names like Dabur, ITC, Redico Khaitan from the liquor space that's also up and about in trade. From the other spaces like IT, for instance, you're seeing some mid-cap names like Coffee Enterprise, you're seeing Coforge, you're seeing HCL Technologies, Infosys, Tech Mahindra. These are the names that are still up and about in trade. Talking about some of the other names, when we look at, in fact, I think the liquor space is gathering ground. You can see Radico, Som Distilleries also up, GM Breweries, Global Spirits, Redico, all of them up and about in trade. So the liquor space is also garnering some traction in today's trade as well. Let's also talk about some of the other names. We can maybe look at some names within the plastics category. A lot of plastic names are doing well today. Let's look at Moltech Technologies. Let's also look at Texmo Pipes, Supreme Industries. These are the names that are still hovering up and about. Sugar space, remember, the year end is coming up and you have the sugar space also in a sweet spot. Balrampur Chini, Dalmia Bharat. These are the names that are hovering high, and we now have our guest with us. Nilesh Jain is now joined in on the program. Hi Nilesh, warm welcome to you, and thank you so much for taking the time out for this conversation. Nilesh, I want to begin by understanding from you first up your view on the markets, and of course then we'll be getting back to the queries from our viewers as well. How are you looking at the markets currently? What do you think is standing out for you here?
Very good afternoon, Sakshi. Well, today we did see a gap down opening tracking the weak global cues. Looking at the overall setup in the global market, which is indicating a kind of a mixed setup in the Indian equity market as well. If you see on Friday, we have seen a very good momentum, but today that momentum got fizzled out. But the overall structure still looks strong. And if Nifty manages to close above 26,000, where the probability of closing above 26,000 is very high today, then we can expect a move towards 26,100 to 26,200 on the upside. And the Bank Nifty, which is also trading in a positive territory for the day, and it has defended 59,000 level in last few trading sessions now. So Bank Nifty looks strong, and we can expect a move towards 60,000 very soon. So structure-wise, buying decline should be the strategy in the Bank Nifty, keeping a stop loss below 59,000. If at all you get any dip, that can be used as a buying opportunity. But overall, a very good setup for the stock specific market. On index fund, we believe that this kind of a consolidation is likely to continue, but the bias remains on the positive side.
Okay, got that. Let me actually now look at welcoming all our viewers who are joining in on the program to ask their questions on the show as well. We have a lot of viewers who are already with us. We have Chandra Singh with us, Umang Sheth, Sri Lakshmi Narayan. We also have Satyanarayan Rao. We have Shubham Malik joining in. Welcome to all of you who are joining in on the program with all your questions. Tanmay is with us. We have Nancy with us as well. Vinu is with us. Aarti Jain, Kamlesh Narkere. Welcome to all of you. So let's kickstart. There are a lot of queries already pouring in, Nilesh. And of course, we'll come back to asking your own choice of stocks as well. But the first one is from Aarti. She says, I want to make fresh investment in GMR Airport and in BHEL as well. So two stocks from different sectors completely. Any advice here? Maybe for 1 month is her viewpoint. So trading perspective, GMR Airport, BHEL. Where do you find better trading risk reward?
See, both the stocks have a very good setup, specifically GMR Airport, where we have seen a very strong move coming in with a good price and volume attraction on Friday. Today we are getting follow-up more on the upside. So overall setup for GMR Airport looks strong. On the upside, 110, 115 kind of levels one can keep an eye on from a short-term trading perspective. We're keeping a stop loss below 100. If at all you get any dip, that can be used as a buying opportunity. The structure appears strong for GMR Airport. Now coming to BHEL, here the breakout is awaited. If at all it takes out 290 level on the upside, then will be considered as a short-term consolidation breakout. But overall setup at current level as well looks on a positive side. So can be added at present market price, keeping the stop loss below 275, and on the upside, a short-term trading perspective, we can expect a move towards 295 to 300. So these are the levels on the upside. Both the stocks appear on a positive side.
Okay, got that. Let's take the next one. This one is from one of our viewers, Shomalia Biswas from Kolkata. He wants to know a view on Nifty from you. He says, I have 8 lots of Nifty for 23rd December expiry, 26,100 call option at 95.5. Should I hold it for BTST or not? Is what his question is, Nilesh.
See, 26,100 call, I think the expiry is of 17 December, that's tomorrow. If bought it tomorrow's expiry, then I don't see that kind of spurt coming in on immediate basis because the structure, as mentioned at the start of the market commentary, I believe the consolidation is likely to continue. But yes, if bought it for next weekly expiry point of view, then there are high possibility of index moving closer towards 26,100, 26,150 in the coming few trading sessions. But yes, keep a strict stop loss in the underlying. If Nifty slips below 25,950, then I would suggest to exit from the long position because the time decay will work against your call option and the premiums will erode. That's why it is important to keep a strict stop loss. And as of now, since there is lack of movement in the market, so we can expect the time decay to continue. So advisable to keep a trailing stop loss at the underlying that is placed at 25,950. If at all you get any spurt in the underlying towards 2650 and 26,100, use that pullback to exit from the long position.
Okay, got that. Let me also look at some of the other questions coming in. We have Vinita Gupta asking the next question. She wants to know from you on the auto space, particularly Nileshji. She says, I want to know any near-term targets that you could suggest on Jamna Auto and on Motherson Sumi. Any suggestion on both these as far as near-term targets are concerned? Jamna Auto currently at 126, 1.3% higher in trade, holding up positive. We also have Motherson Samyo, or now it's called Samvardhan Motherson, and she wants to know what exactly would be the outlook on this one as well, currently trading at 119.
Well, both the stocks are looking good on the chart, have a similar setup. Jamna Auto, in fact, this particular counter is looking strong for 130, 135 from a short to medium term perspective. And this momentum is likely to continue. Keeping a trailing stop loss at 121, one can stay put in Jamna Auto, and buy and decline can be the strategy that can be deployed because the structure in Jamna Auto looks strong. Now, coming to Motherson, as mentioned, it has a similar structure. This particular counter has given recently gave a very good breakout from the levels of 112, 113. That's a multi-year breakout that we have seen. So Motherson, we also bullish for 126 to 130 target from a short to medium term perspective, keeping a trailing stop loss at 114. One can go long on declines, and if at all already bought in, then stay put is the advice. But keep a trailing stop loss. The structure from a short to medium term perspective looks positive.
Okay, got that. Taking the next question then, we have this question from one of our viewers. Okay, Sheetal Agarwal. She says, hi Sakshi, I need a view on EPL. My own purchase price for this stock has been 241, and I also have another stock. This is Jindal Saw, which I bought at 255. And she wants to know, since she is on losses, what exactly should she be doing? EPL Limited currently at 218, purchase price was 241. Jindal Saw, the purchase price was 255.
Right, Sakshi. So first of all, I would like to start with Jindal Saw. The stock is constantly witnessing a lower top and lower top formation. It's in a downtrend. If you pull up the chart of last 1 year, you can clearly see since October 2024, after making high near about 375, it has started, continuous declining trend. And the structure appears weak. But yes, since it has gone into extremely volatile territory, there could be possibility of a pullback move. But the purchase price is quite higher. That price will take a lot of time to come. So if holding period is more than 1 year, then stay put is the advice. Keep a trailing stop loss now at 145, and the trading perspective advice would be to exit on decline, exit on pullbacks. Now coming to EPL, this particular counter looks better placed now because we have already seen a correction. Now the trend has reversed, and we have seen a very good momentum in last 3 to 5 sessions. So this pullback momentum is likely to continue towards 225 to 230 on immediate basis. Now here the stop loss comes around 209, so that should be your trailing stop loss, and stay put in EPL as well.
Okay. The next question that we have is on Igrashi Motors. This is Saktani asking, Igrashi Motors, can he look at a fresh entry for 1 month view?
Igrashi Motor, see, from a short-term, medium-term perspective, there is no clear trend because the counter has been trading in a very tight range. On the upside, 800, 750, that's the supply zone, and good part is that it has a very strong support near about 400. So first of all, if you have already bought it, then keep a very tight stop loss at 400, because if it breaks 400 levels, then it may slide further towards 350 to 300 as well. So first of all, keep a tight stop loss at 400. And if at all you get any pullback towards 480 to 500, use that pullback to exit. If bought it purely from a short to medium term trading perspective, then exit on pullback should be the advice.
Okay. Let's take the next question. This one is from one of our viewers on our WhatsApp, Gul from Kerala. She says, Nilesh sir, can I buy ITC hotels for 1 to 2 years, and at what price should I make an entry?
The ITC hotel is a very good counter from a 1 to 2 years time frame. I think at present level as well, you can start accumulating, not to buy at one go, but the ideal strategy should be to accumulate and buy in a staggered manner. So multiple tranches you can start accumulating this counter. It has a very strong support at 160, 165 zone. So on multiple tranches you can enter in this particular counter. I believe from a short term perspective there could be possibility of a stock moving towards 185 to 180. That could be a good entry point in terms of making a fresh entry.
Okay. Let's take the next question. This one is from Murali Krishna. He's from Hyderabad and he says, I have actually purchased 100 shares of Trent at 4,569, but it's now trading at 4,042. I want to know, should I continue to hold on for long term or should I quit? Now, this is a very interesting question. A lot of people who bet big time on Trent in the year 2024, where it turned out to be the best Nifty stock, the only Nifty stock that doubled investors' money. This entire year has actually been, a slow-moving one for the counter, and therefore absolutely low or no returns for Trent for this year. In the last 1 year, in fact, we have seen the stock drop by about 42%. Any suggestion? What should one do?
Absolutely, Sakshi, you rightly pointed out. We have seen a very strong momentum for a couple of years till 2024, but soon after that, in last 1 year, we have seen a sharp decline that has continued, and overall structure has turned on a negative side. So, from a short to medium term perspective, the structure still appears weak, and pullbacks are likely to get sold into. On the lower side, the next support comes somewhere around 3,700. But if bought it from a long-term perspective, then I think one can stay put because the stock has already corrected close to 42 to 45% in last 1 year. There are high possibility of a pullback move towards 4,500 to 4,800. So one can wait for that pullback from a longer term perspective, but keep a trading stop loss at 3,700 now, and yes, one can stay put if bought it purely from a next 1 year plus kind of time frame.
Okay, got that. Let's take the next one then. We have this question coming in from one of our viewers, Mohit. He's from Ludhiana and he says, I have 1,000 shares of SBI at 184. My time horizon is 5 years. Can you please guide me what exactly should I be doing? So believing on the largest PSU bank that we have in the country, and for the next 5 years, bought at 184. Look at the price now. It is 966. So Mohit, I believe you've actually got a very early entry into SBI. You were already sitting on multi-bagger returns on this stock, and you further want to stay invested for the next 5 years as well. Well, no harm, I think. Nilesh, what would you say?
Absolutely, Sakshi. So first of all, congratulations to him because there are very few people, who stay invested for a longer term time frame in this kind of a quality stock. So I still believe there is further room on the upside for stock to move, and if somebody is looking to make an investment from a next 4 to 5 year perspective, I think in terms of making a fresh entry, buy and decline should be the strategy. Already bought it at a very low price, then definitely you should stay put for the upside target of close to 1500 to 1700. So that kind of target quite possible in next 2 to 3 year kind of time frame. 5 years is a very long term time frame, but keeping in mind that this particular counter is one of the index heavyweight and a very quality PSU bank. So stay put is the advice, but keep a tailing stop loss in order to protect your principal as well as your return on investment. So keep a tailing stop loss now that comes somewhere around 900 rupees. So that should be the stop loss, and right, this momentum looks very strong on the chart.
Okay, got that. I hope this has truly helped you out. Let's take the next question. This one is from Kaushik Rana. He says, hi, Sakshi, good afternoon. I have PFC shares in my portfolio at 442. I want a long-term view on this one. What would you advise?
See, the longer term time frame as well, if you see PFC, RNC, both stocks are from a quality, pack, but from a short to medium term perspective, there is still some more room left on the lower side because the structure has been in a downtrend for both the stocks. Specifically, PFC looks like it is heading towards 330, 320 on immediate basis. But yes, if somebody has a time frame of next 1 2 years, then I believe there could be possibility of a gradual up move to continue going forward. We have already seen a decent correction. There could be possibility of a rebound going forward. So stay put is the advice. for upside levels of 420, 450 kind of levels on the upside can be seen in next 1.5 year. Keep a trailing stop loss now that comes somewhere around 310, and one can stay put for a longer term time frame.
Okay, fair point. Let's actually take the next one. This one is from one of our viewers, Tapan from Kolkata. He says, Namaskar Sakshi ji, congratulations for the ENBA awards. This is a fantastic achievement and a testament to your hard work, dedication and outstanding production. Thank you so much, Tapan ji, for writing it such wonderful, appreciative words for all of us. At Business Today television team, yes, we are celebrating, victory of 6 awards at the ENBA Awards 2025 edition for Business Today television, and this would not have been possible without our viewers' constant belief and support as well. And this definitely helps us to raise our bar every day, to ensure that with the belief that you start off every day with us by placing your trust in us, we are going to be ensuring that you get the best of market insights and analysis for top market experts like Nilesh himself to help you out finding out what's the right strategy, which are the right stocks that you should be invested in for profitable trades and investments. So thank you so much for your wishes. Your question is on NTPC. He says, there's absolutely no power in NTPC. What should I do? Should I buy, sell or hold? Yes, that you're right about, because the power stocks that were in flavor in the last year have kind of, slipped from that momentum. Let's find out whether there is any uptick in the new year probably for NTPC. What would you say?
Well, Sakshi, first of all, many congratulations for those awards. Now, coming to NTPC, this particular query, see, power stocks has been in a downtrend. All the power counters have been moving on a sluggish note. So NTPC is also looking sideways to weak as of now. But there could be possibility of some bit of a pullback move in this particular counter towards 335 to 340. So that's a very short-term time frame kind of a view as of now. But from a longer-term perspective, I believe this particular counter needs to break 345 level on the upside. Then probably we can expect a short-term bottom in this counter, and then it can move towards 380 to 400 as well. But for that, it needs to break 345 barrier on the upside. At present, one can stay put if bought it from a longer term perspective, keeping a trailing stop loss at 315. 315 is a multi-month support, so that should be the stop loss for the long position, and we can expect some bit of rebound going forward.
Okay, got that. Let's take the next one. This one is from one of our viewers. Okay, Nancy says, congratulations to your entire channel team. Thank you so much, Nancy. She says, I want to know, will the listing of ICICI AMC bring any traction to the Canara Robeco AMC stock or not, and what could be the short-term targets? Well, for both of these, you will not have any charts to study there, Nilesh, but yes, we are awaiting ICICI AMC's listing. Of course, we've been discussing the AMC space at large and seeing that whether such a large IPO that's actually going to be getting converted into a listed space, 10,000 odd crore rupees of an IPO that came in, how will it impact HDFC, AMC and the others that are already listed? What will be the newer dynamics that one should be aware of? Any suggestion on the AMC space?
Well, there will be certainly some bit of impact in the AMC space. So within that space, if you look at HDFC AMC, UTI AMC, these are the couple of stocks that are better placed as of now. So one can look for HDFC AMC. It's from a very strong brand value, and it has also taken very good support at long-term 200-day moving average, which is placed at 2,500. So from a positional perspective, it's a very good portfolio stock that one can look for if at all you get any further declines from here, and we can expect a move towards 2,750 to 2,800. And ICICI Prudential Life AMC that is coming out with the IPO, the GMP is also somewhere around 10 to 15%. And looking at the anchor book, I believe there could be possibility that we may see a good return coming in that particular counter from a longer term perspective. So that is also looking positive. But yes, with the listed peers, I think HDFC AMC is a better option.
Got that. Thank you so much, Nilesh, then for sparing your time for us and being with us on the show. And always appreciate your guidance to all our viewers. Hope you have a great time. We'll see and connect with you yet again on another edition of Daily Call soon.
Thank you so much, Sakshi.
All right, viewers, let's start looking at the markets again and see how they are trading at half time. Well, you still look at the Nifty and it's still about 26,022. So just minor losses there, but we've recovered from the day's lowest point and we are now at the high point of the day. Gives us some confidence that maybe in the second half you may see a green closing for the markets. The Nifty Bank has already turned green. You can see 1/10% of an uptick that's coming in there. So it's the banks that are supporting this recovery in the markets today. Let's in fact also welcome another guest on our channel. We have Osho Krishnan joining in on our program, another favorite on the show as well from Angel One. Warm welcome to you. Good to have you with us. Osho, first up, your sense on the markets showing some signs of a recovery from the day's low. We had a gap down start. Any signs that we could be ending much higher in the green in the second half, looking at what's happening at halftime?
A very good afternoon, Sakshi. Firstly, thank you for inviting me at the show. Well, yes, no doubt we have seen a kind of a bleak start for the week for the benchmark indices, although there has been a decent rebound from the lower end, especially the bullish gap has seen kind of a strong resurgence. But overall, the market breadth remains on 1:1 kind of a scenario. The tug of war has been very strong for both bulls and the bears. So I'm not very much optimistic and not even pessimistic in the market at present. I am having a buy on dip kind of an approach. 25,900 was a very strong support level, and from there we have seen some kind of a strong recovery. On the higher end, 26,070 to 26,100 on spot levels is a very strong resistance level. So once it closes, once the Nifty closes above the zone of 26,100, then only we can see some kind of buying traction coming back into the market. Till that time, it's better to stay on the sidelines or try to accumulate positions on any kind of dip towards 25,900, 950 in intraday basis. Although I'm expecting that for the day, there might be a possibility for a decent surge towards 26,050 to 26,080 kind of a levels for intraday traders. So that can be seen as an opportunity where one can look for buying position, and for those who already have a position, it's better to stay invested for the day, and I'm expecting nearly 50 points of upside rally in Nifty for the day.
Okay, let's look at some other questions that are coming in from our viewers then. Osho, we have the first question for you. Chandan Jain from Hubli, Karnataka says, I want to know about NCC. I have 1,000 shares at 250, but the stock is at 52-week low. What should I do? Should I book my loss?
The overall NCC is not performing well. There has been decent correction or very magnificent correction from the zone of 220 odd levels. The counter is now at a very strong and historical support levels of 160, 150 kind of levels. So at present, it won't be advisable to exit from the counters. There might be some kind of recovery coming soon in the counter, although I'm not very much optimistic because the technicals are quite sideways for the counter. But on the short-term perspective, any kind of bounce towards 185 to 190 can be seen as an opportunity to exit from position. At present levels, better to stay invested in the counter.
Okay, let's look at the next question then. We have this question coming in from one of our viewers on our YouTube again, Muthailu James. He says, I'm from Hyderabad. I have Siemens shares, 200 at the rate of 3,300. But the stock is now in a downtrend. What should I be doing now on Siemens?
Overall, the counter is not into downtrend. It is into a very strong consolidation. It is having a very strong support levels around the zone of 3,000. And on the higher end, again, 3,350 is a very strong resistance. So until it gives a decisive breakthrough from these consolidation phase, it's better to stay sidelines. Obviously, the position is held, so it will be advisable to keep holding the position. A breakout above 3,350 can provide very strong momentum, and the upside target from medium-term point of view is nearly 3,650 to 3,700 in Siemens. So it will be advisable to stay invested.
Okay, got that. Let's take the next question too. We have this next question from Sakshi Pal says, hi sir, can you please suggest any entry level in Sterlite Technologies? I need your view on the same.
For Sterlite Technology, I expect that the counter is at a very strong support of 200-day simple moving average. The zone of 95, 94 has historically seen a very strong support zone. So I expect that once it breaches the zone of nearly 100 on a decisive and sustained manner, those levels can be seen to accumulate the position. Or if there will be further correction towards the zone of 92, that levels also will be apt level to start accumulating this counter. So wait for a sustainable move beyond 100 and then start accumulating this counter. 120 will be the target from short.
Okay, let's take the next question. This one is from Mirza Yamin from Riyadh. He says, Sakshi, after receiving so many awards, the channel's reliability, reputation is completely endorsed, and I congratulate you for the same. Thank you so much, Mr. Mirza Yamin. Yes, we are celebrating our big victory at the ENBA Awards of 2025. Your channel, Business Today Television, has won 6 awards this time around. For all our shows, we have got some or the other award. We've got Easynomics, that's anchored by our group editor Siddharth Zurabi, a gold award for that. We've also got a gold award for our opening show, the Market Today opening show, opening bell show as well. We've also got an award for Market Masters and Market Guru, where top market masters come in and share their insights. This would not have been possible without all of your support. So thank you so much for appreciating your channel. We continue to stay committed to all our viewers and to continue to get them the best of market insight that's available, with top market experts like Osho joining in every day and solving your queries on the show as well. All right, let's take the question that a lot of our viewers are asking as well. The next question that we have is from again, Mirza Yamin, who has written, I want to know about Whirlpool. The question is at 1292, he already has some 90 shares. What exactly would be the outlook on Whirlpool?
Firstly, Sakshi, I will take a moment to congratulate you and the whole team, because I skipped at the introduction and I was in a hurry to give the recommendation and the views. So many congratulations to you and the whole team. Well, now coming to the queries of Whirlpool, then this counter has been into a very strong corrective phase from the zone of 1400. There has been single side movement on the lower end, but at present the counter is at historical support. The same zone has been tested in the month of March 2025. So I'm expecting that at present levels it won't be advisable to exit. The technical parameters have also moved towards the oversold terrain. So I'm expecting that from here onwards there is a possibility of some kind of resurgence in the counter. On the higher end, 1150 and 1180 will be acting as the first resistance level, so one can look to exit their position on any bounce towards 1180 in the short term time.
Okay, let's take the next question. This one is from one of our viewers. That's Partha Sati Krishna, says, Sakshi, congrats to you and to your entire team. Thank you so much, Partha. Question is on ONGC for mid to long term. How would you view this upstream company, oil and natural gas?
From medium term perspective, firstly, the counter is very, very positive. Although there has been some kind of consolidation in current financial year, the counter has been into a sideways momentum. But overall, I am expecting that this can be seen as a time-wise correction after the rally that we have seen from the lows in the 2022, the zone of 100 towards 320 kind of a zone. So this should be considered as time-wise corrective phase for the counter. Overall, the trajectory remains on the positive front, and I am expecting once it breaches the zone of 250 on a decisive and sustainable manner, then from there onwards we can see another rally marching towards the zone of 290 to 300 from a short term to medium term point of view. So stay invested and even can accumulate further positions on any dip towards the zone of 220.
Okay, got that. Let's take the next question, and this one is from one of our viewers, Namish. He says, this is a very useful show for us retail investors. Thank you so much, Namish. The question is on Omax Auto. Can I buy right now, and what could be the target and stop loss that you would recommend to him, is the question, Osho. Omax Auto.
Omax Auto has started gaining traction from the support zone of nearly 85 to 88 kind of levels, and I'm expecting that in the short term period, looking at the technical formation that the counter has seen, there is a possibility of further revival towards the zone of 125. But again, this counter is illiquid in nature. The volume is on the trading front is very low, so it will be high risk kind of a counter. But overall, the technical setup suggesting a kind of reversal. So one can look for opportunity for targets of nearly 125 to 130 from short term point of view.
Okay, so 125, 130 kind of targets coming in. Let's take the next question. Okay, so we have Vinita Gupta saying congratulations to Sakshi and entire team of Business Today. Thank you, Vinita, for your wishes. Tanmay Dave says, wish you congratulations, man. Many more to come. Well, thank you so much. We are also hoping to get so. Now, the question from Tanmay is that my question is on Geo Finance. I want to know whether this is the right time to invest in Geo Finance or should I wait for some dips to enter?
Geofinance is into a very strong consolidation phase. So yes, definitely one can start accumulating the counter at present levels. Any breakout above the zone of 310 to 312 can provide very strong momentum in the coming future. So one can start accumulating in a staggered manner and even can aggravate investments once it breaches the zone of 312 in the coming future on a decisive manner. So from there onwards, I am expecting it to retest the zone of 340-45 from short to medium term point of view.
Okay, got that. Let's take the next question, and this one is again from one of our viewers. On our YouTube again, we have a lot of questions coming in. Lapnish wants to know on IRIDA. The question is that I have a big quantity of IRIDA in my portfolio, around 4,500 shares at 176. What should my strategy be right now? Well, IRIDA, of course, it was one of the stocks that had a strong relisting. Thereafter, it moved substantially to give great wealth returns to investors. But it has been in a kind of a non-performing zone over the last 1 year odd or so. 135 and those levels of above 200 seem to be far behind us, at least for now. Let's find out from Osho whether there is any uptick that is in sight. The stock has already fallen 37% this year.
Presently, the counter has given a breakdown from the very strong support of nearly 140. So that will be a crucial zone to watch out for. If it again recovers above the zone of 140, then from a short-term point of view, we can see some kind of recovery towards the zone of 152 to 155 kind of levels. But the barrier is present around the zone of 156. The 200-day simple moving average, which is a very strong hurdle for the counter, is at 156. If it breaches that zone, then only we can see some kind of traction coming back. But till that time, better to stay invested on the counter, but on the higher end, 148 to 150 kind of a zone can be looked for selling opportunity in this.
Okay, got that. Let me also take the next question. This one is from Swami Yogesh, who says congratulations for all your achievements. Business Today. Thank you so much for writing in. The question is on Aris Infra. At 145, I purchased this stock. Can I continue to hold on this or should I exit? Aris Infra.
No, Aris Infra is not into my radar as of now, so okay. I won't be able to give a very strong view on this count.
Okay, let's take the next question then. We have another question that's actually coming in. There are a lot of questions today. Let me actually take some from our WhatsApp also. Srikanth from Bangalore, he says, I'm a regular viewer and a follower of your program. Congratulations on winning many accolades for your channel. Thank you so much, Srikanth, first of all, for placing your trust in Business Today television, watching our program daily, and I truly hope that this is helping you out in your own investment journey. We will continue to endeavor that you get, all the insights that you seek from professionals, from all those people who are SEBI registered, who are the advisors, who truly you should be trusting on our channel. So the question that he has is on South Indian Bank. He has 35,000 shares at an average price of 20 rupees. Wants to know, should I completely book out with my profits or should I add some more at this stage as well? Will it be a multi-bagger stock even going forward? What would you say? So from 20 rupees to 39, you're already doubling your money there. So congratulations on that front. Your suggestion on South Indian Bank right now, especially with all that talk about foreign ownership, changes, consolidation, how are you looking at South Indian Bank?
See, overall the counter has seen very strong traction after the breakout zone of nearly 30 kind of levels. The counter has seen a very strong stellar rally. So I'm expecting that there is a possibility of further upside movement because the counter has been into a consolidation phase. So it will be advisable to trail profit with a stop loss of nearly 36.50, and on the higher end I am expecting once it breaches the zone of 41 on a decisive manner, Then from here onwards, next target will be near about 48 to 50 kind of zone. So overall, the trajectory remains on the bullish front, but it is always better to trail the profits on the higher end. So 3650 will be the stop loss, advisable stop loss. The upside target is 48.
Okay, got that. Let's take the next question. This one is from again one of our viewers on our WhatsApp here. We have a question coming in from one of our viewers. Okay, Tanmay, we've already addressed. Let me take another question. Okay, this is Sri Sai from Hyderabad. Says the stock name is Capstan, and I want to know whether I can buy this stock at the current market price. Although Osho, we don't have the view as to whether it's a trading view or not, but Capstan Services currently at 300 odd levels. Last 1 month it's declined by about 8 odd percent, but in the last 6 months from say about June to about maybe November beginning, we actually saw a good move. How would you look at the stock?
The counter is definitely not a very liquid counter because the trading volumes are not very strong. It's below 20 or 30,000 kind of trading levels on daily time frame. But overall, technically, the counter is above the short-term moving average. So technically, it is looking positive. Any kind of dip towards the zone of 260 can be seen as buying opportunity. But again, being a low trading volume counter, it will be high risk or high beta counter. So always trail stop losses on the higher end. Currently 260 will be the advisable zone to start accumulating, with keeping a stop loss of nearly 230 from short to medium term point of view.
Okay, the next question is from Satyan. He says, good afternoon, I want to know about HCC, Hindustan Construction Company rights issue. Should I subscribe it or avoid it? It's been holding at 36 odd levels for a year or so, so please advise, if not to subscribe, then should I switch to any other stock? I want to really know about real estate stocks and infra stocks that are really down in this year so far for me. So any scope for any rebound on HCC? The rights issue is at 12.5. Any suggestion here on Hindustan Construction Company, Osho?
See, technically, I can definitely give an advice. The counter is into a kind of corrective phase below the short-term moving average. So from here onwards, there is possibility of further correction towards the zone of 16 to 15.50 kind of a zone. So technically, it is looking bleak, and one might look for opportunity to have the right issue at lower levels. But technically, I'm not having any positive view. The technical parameters are also quite pessimistic in the counter. So better to exit on any bounce towards the zone of 21 to 22 in the coming future.
Okay, got that. Let's take another question, and this will be the last question that we will take today, and then we will move to Osho's own choice of stocks too. Nagesh Godri from Kodikal in Karnataka says that I want to know about Moschip Technologies. My view is long term, 1 to 2 years. The current market price is 216, and I'm planning to buy 500 shares. Would it be advisable on Moschip to buy at the current levels?
See, again, this counter is recently listed, so the technical parameters are not very strong in the counter, but overall, looking at the recent correction and consolidation in the counter, there might be some possibility of reversal, but that confirmation will come only once it crosses the zone of 215 to 218 on the higher end. Then only one can look for buying opportunity in this counter.
Okay, got that. Well, Osho, towards the end, any key stock ideas that you'd like to suggest to our viewers?
Yes, there are few counters which are looking very positive to me. First counter which is on my radar from a trading point of view is UPL. UPL is looking quite positive. There has been strong momentum in this counter from the zone of 50-day exponential moving average. So I'm expecting that in the short-term period, there is a strong possibility for the counter to test the zone of 780 to 790. And on the lower end, it will be advisable to keep a stop loss of 742. The other counter which is looking positive is IIFL. IIFL has seen a decent momentum from the 20-day exponential moving average, currently placed at 573 kind of a zone. So it is advisable to start accumulating the counter at current levels. 555 to 560 is a very strong support level, so that should be kept as a stop loss. On the higher end, 600 followed by 620 is the short-term target for the counter.
Okay, fair point. Thank you so much, Osho, then for being with us on the program, and of course sharing with us all your views and guiding all our viewers with their queries too. Thank you so much. 26,016 viewers. On the Nifty, 29 points lower in trade at this point in time. But let's see, as Osho pointed out, there is an uptick that he does expect in the markets going forward. With that, we wrap up this special edition of Daily Calls. Thank you so much for joining in. Do stay tuned to continue to watch the entire market coverage through the course of the day. Of course, I'll be seeing you for the closing edition at 3 p.m. now.
From overnight global cues to live Dalal Street moves, we decode what matters for your money